Today, my viewers, I want to talk about business. Once you get your money in business, and let's just say I'm just using the term of $10,000, what do I do with it? As a business owner, you have to understand the language of money. You also got to understand how to divide it up so everybody gets their due share. And we're going to just go over that today briefly. And I didn't go into a lot of detail here. These are really just some basics of what you have to do. And everybody has the personal side, whether they're an employee or not. A business owner has this side and the personal side. So we're going to talk about it. So these are the business owner basic accounts. These are the bank accounts that you have to have in order to facilitate putting the monies in the right pile. One thing an owner has to have, though, is economic responsibility. What does that mean? You have to really understand money, and you have to understand where it goes, because you've got your employees depending on you, you've got your vendors depending on you, you have your family depending on you, you have your kids depending on you, and your employees' family. You have a lot of responsibility here. So it's up to you to make sure that this money is taken and put in the right piles, because everybody's looking at you. Some of these people have anywhere from 5 to 500 people they're responsible for. So you have to have that responsibility to make sure that money is handled in the correct manner. First thing you want to do is you want to put your money into a business account. All your revenue goes into one account. Revenue comes from your services, what you sell, your labor, whatever that is. But all revenue goes into one account. And out of this account here, I wrote down you want to have payroll, because you got to pay your employees, and you have to pay yourself, the owner. Your employees have to be paid for the work they've done. If you don't have employees, you can't get anything accomplished. So you have to take care of them first, and you have to take care of yourself. You should always make sure they're taken care of. And I'm going to point out right here, the owner, you deserve to get paid. Okay? The second thing you want to do is make sure you have a separate account that you want to put your taxes in. So, for instance, when you pay everyone, whatever profit that you have out of the $10,000, whatever that is, you put in a third for the IRS. So if it's $10,000, you put in $3,333. But always make sure you have a separate account, because you got to pay not only the IRS, you got to pay state and local taxes as well. Each state varies, each county varies. As we go back over here, you want another account for business expenses. Business expenses is a liability. Business expenses are your materials, your rent, your trucks, whatever that is. Okay, these are liabilities. Monies that have to be paid out each month, and monies that you rightfully owe. So you have to make sure you pay that. That's called accounts payable, by the way. Always have a business savings. It's kind of like a business emergency fund. You want a separate account over to the side, and you want to just put in, if you can afford it, $1,000 or $5,000, but it's that cushion. So if you run into a slow time, because most businesses are seasonal. Most businesses have a high season and a low season. And sometimes you need that money to help you get through to pay your employees or your vendors or your rent on your building or mortgage payment on your building, whatever. But always have a business savings account. That's extremely important. Now, I put down owners. You have to work for yourself and not against yourself. Think about what you're doing. Some of these owners out here are just absolutely not thinking about anything they're doing. They're doing everything impulsively, irrationally. They're not thinking about what they're doing. You have to always think about all the people involved. It's not always about the owner, you. You have to think about everybody that you're responsible for, your employees, your vendors, your family. You know, when you make a decision, a lot of times it's private, it's up here, but then whatever that decision is goes public. Everybody knows what decision you make. So it's important that you make the right decisions on everything. I personally had a red flag. It always went up in me on a certain level. Each one of us are individuals. We're all separate, and what our tolerance level is. My tolerance level was very low personally because I always wanted to make sure I took care of everybody else and I took care of me last. So I always make sure all the decisions were based on the goodwill of everyone involved in my life. I just want to point out one more time, assets minus liabilities equals profit. That's your equity. That's why you have to watch how you spend your money, decisions you make, and don't be impulsive. I put down right here 3-to-1 ratio. What that really means, let's just say you have $10,000. In order to make $10,000 clear profit, you have to do about $30,000 worth of work. Sometimes 35, but it's usually a 3-to-1 minimum ratio in order for you to make a profit, for you to build a profitable business, you to pay off all your property business bills, also for you to make yourself a good payroll and for you to buy assets on your side. We're going to talk about that now. Personal. Now you've taken your money as a business owner and you have paid all your bills in your business and you paid yourself. Remember right here I said you got to pay yourself. So now you paid yourself and you put it into your individual income account. I call it earned income. You have a right to earn a living. I recommend that you pay a W-2. Pay all your taxes, do everything you're supposed to do. That way you can max out your 401k plan or your simple plan or your SEP IRA plan, depending on how you've got your business retirement plan set up. Because you're allowed to pay up to 25% after you get to a certain level, minimum of 17%. Very important for you to retire wealthy. I wrote down here, emotional maturity. Act like a grown-up. Don't think because when you take that money and you put it in your account, you can go out and just spend it on fancy cars and bigger houses and vacations. You deserve all those things. I'm not saying you don't. But when you're first starting out, for the first 5 to 10 years, you really need to work in the business hard and learn how to work the business in order to get all those things that you want. And I call it act like a grown-up. You got your kids to pay for, you've got your home to pay for, you've got to live, okay? You have to do all these things. So the first thing that comes out of your monies is your home expenses, your mortgage. First of all, anytime you buy a house, let's just say you make $100,000 a year, your max out-of-pocket mortgage payment per year should be not more than 20% of your gross income. So your house payment should never be more than $20,000 a year. Now, these banks are going to try to get you to go more, but don't, because I'll be honest with you, when you get yourself up to 25 or 30%, then you're really on the red line of having problems, because being a homeowner, although it is called a forced savings plan, you have insurances, breakdown, the air conditioning goes out, the plumbing goes out. You still have to pay for all that. So you want to make sure you don't overextend yourself, because you've got all your utilities, insurances, and it goes on and on and on as a homeowner. But I do recommend buying a house. Okay, I come over here. I'm taking part of my money and I'm putting it into a retirement account. Retirement accounts are very important. It goes back to the W-2 wages I mentioned. You want your 401s, You want the Roth IRAs. You can put up to $6,500. This is a pre-tax Roth IRA. So you put in your $6,500 and it grows tax deferred for the rest of your life. So if you're a young person, say you're 20, 25, you put in your $6,500 4, 5, 6 years in a row, you'll have $1 million times your 65. And we'll talk about that later. That's another little trick that you need to learn. The SEP IRA is through your business also, okay? You can put in so much for that into your retirement account. And I put down 529B. That's a college account. If you got small kids, you might want to put into 529B. Most states have that set up. I'm sure all states do. And that's paying into a college fund. It's like a mutual fund for your children. So when they get grown up and college age, you don't have to pull out all that money for the next 4 or 5 years. It's already paid for. The next thing I want to talk about is emergency fund. And really, emergency fund is very important to have an emergency fund. You want 3 to 6 months of your income, whatever that is, and you want that into a separate account. That emergency fund is for emergencies. The plumbing has a leak. The air conditioner breaks down. My car needs a new transmission. That's an emergency. Emergency is not going out to dinner, taking a vacation, buying clothes. That's not an emergency. Emergencies are emergencies. And if you don't know what the definition of emergency is, look it up. One thing I will say about an emergency fund, when you have an emergency, it's not an emergency. It's an inconvenience because I have the money to pay for it. This is extremely helpful. It takes a lot of stress off of you. It just, it's really, when it comes down and you really have problems and you have real emergencies, this is really a breath of life. Personal savings. I always had a personal savings account, and sometimes I can only put $100 a month, $50 a month, maybe $500 a month as I got further in business. And I left that money out there and I never touched it. I actually called it my amnesia account. I forgot all about it. Why? Because I wanted to put that money in there so at some point in time, if there was an opportunity to come along, I could buy an asset. What does an asset do? It puts money in your pocket. Anything that earns you money is an asset. I personally bought real estate because I know real estate. I didn't know anything else. So I would save that money, and then when I got to the point to where my house was paid for, I bought my first rental property. I want to tell you one thing right now. The best thing to do is if you make $100 a week, you need to learn to live on $80 a week. Always live below your means. You don't have to impress nobody with what you drive, what you wear, or where you live. The only person you ever need to impress is yourself. If you try to impress people, I guarantee you will be broke, because people don't really care. If they're that shallow, your friends are that shallow, they care about what you wear, where you live, you don't need them. They're not your friends anyway. Always put yourself, meaning your family, yourself first, and worry about them. Don't worry about what anybody else thinks. Live below your means and have a red flag, of what is too much. Like some people has a $50, that $50, the red flag comes up, but you need to have that built-in anti-impulsive nature. A lot of people in a lot of markets, especially grocery stores, the Costco's, the Targets, all these stores that you go into, they prey on impulse buying. That's why they really display it a certain way. So you have to be anti-impulse buyer. When you think you need something, you take 2 or 3 days to think about it. That's what I always do, especially on Amazon and those kind of places online. Put it off to the side. Think about it for 2 or 3 days, because you know what? A lot of times, 2 or 3 days, you don't need it. Yes, sir? I'm glad I didn't buy that. I wouldn't have needed that. So don't waste your money on stuff, junk, I call it. Put it over here. Buy assets with it. Learn to be conservative and not impulsive. I put down right here, auto pay is great for expenses. A lot of times when you put your money into an individual account, you can have your utilities come out of it, maybe your internet come out of it, your mortgage come out of it, your home expenses. But you want to make sure you have enough money in that account so you don't have more expenses from lack of funds, okay? I also put down a budget shows your spending habits. Everybody should have a budget. The reason you want a budget is so you can take your monies and you can allot so much per month for whatever your bills are. Now, you should allot for going out to eat. You should allot for going to the movies. You should allot every couple of months to buy some clothes. You should allot for vacation. I'm not telling you because you have a budget you can't spend money, because the real truth of it is a budget gives you permission to spend money. And that's what you need to do. So budgets aren't an evil word. They're not like bad, I don't want to budget because I can't spend the money. No, that's not the case. It actually tells you, yeah, I can spend $100 this week on groceries, and I can spend $40 on movie tickets and take the kids and we can have popcorn and everything, whatever. But you need to have a budget to keep yourself in line. That is very important because you always want to live below your means, because if you don't, you get yourself in trouble with the bank, and banks make most of their money off of non-sufficient funds. And I know we've all been to strange cities, and the biggest buildings in all these towns throughout the whole United States are usually the banks. You know why? Because people bounce checks. They are behind on their interest payments, their mortgage payments. The banks are debt peddlers, as I've heard. So just always live below your means and watch yourself and stay on a budget. Folks, I hope today this was good for you. I hope you got something out of it. This is just a brief summary of what you need to do once you start making the money, put it in all these assorted piles, and you will have to learn this. This is another language of money sermon is what this really is. If you like this video, please share, please subscribe, and please comment. Thank you.